Good afternoon, everyone, and welcome to the Market Close Report for Friday, the 24th of July. Well, the Aussie share market had a rough end to the week. In fact, it ended up being our worst day in 5 weeks. The ASX 200 down 66 points or 0.75% to 8,772. Still, the fact that a 0.75% decline makes it the worst day in more than a month maybe does just highlight that things haven't been that bad. It's still enough to wipe out the modest gains that we've had on the Aussie share market over the past 3 sessions, and it is also more than enough to drag our market into negative territory as well, slightly for the 3rd consecutive week. Now, a lot has happened over the course of the week, so bear with me before we get to sectors. One of the things which received attention in the past day was an update on jobs growth here in Australia yesterday, which was way stronger than what the market had anticipated. In fact, there were over 76,000 jobs added last month, 5 times more than the market had actually expected. And what this has done effectively is it's raised the market's expectations for a rate hike, not only in August, but also by the end of the year. So market pricing now for about a 40% chance of a rate hike on August the 11th, which is the next time the RBA hands down its decision. Before the data was handed down on jobs yesterday, that was sitting at about a 20% chance. And by the end of the year, the market now thinks there's roughly a 95% chance of an interest rate hike. And this is why next week's update on inflation Wednesday will be very important and could certainly still influence that pricing a little further. Now, what the ongoing Middle East conflict has also received attention. We've had the oil price overnight actually rising above $100 per barrel again, the highest it's been in about 2 months. That conflict has basically seen oil prices lift 7% last night, 14% higher over the week, 38% higher since the start of this month as well. So just another concern around inflation if this doesn't get better, in coming months. And then this morning, we also had a new tariff announced by the United States. Now, we've already had a global 10% or so tariff imposed by the US, which was a temporary measure, but that was expiring over the next day. So this is a new tariff to replace that. 12.5% tariff on Aussie exports has been announced, but there will be a bunch of exemptions in there. And then finally, US share markets gave us quite a negative lead to work with today. Some pretty heavy declines, particularly from tech stocks. We had both Tesla and also Alphabet, Google's parent company, coming out with their results over the last day or so, and their share prices fell quite heavily, and that's been certainly a weight. One of the concerns is the amount of money that's being spent on AI infrastructure, which is a bit bigger than what the market was anticipating, and this in turn has affected cash flows as well. Now, turning our attention to sectors, there were 4 sectors that managed to lift today. The financials, which certainly helped, they were up by about 0.9%. Then we had energy stocks, unsurprisingly, lifting by close to 1 due to high oil prices. Then we had the defensive utilities and defensive consumer staples as well. Outside of those sectors, we had tech down 4%, so basically following on from the lead from Wall Street in that tech space, where the Nasdaq fell by more than 2% last night, but also the South Korean markets also have been under a lot of pressure. The materials, those big miners, were down quite heavily. Again, there were a couple of areas that weighed more than most, but they were down quite by about 3%, and then communication services and most of the others were down as well. Now, there were standouts today, and we had in the energy space, Karoon Energy, top of the bunch. It was up almost 11% today. Now, there were 2 brokers that raised their share price targets for where they think the stock might be in 12 months' time. And this is a day after it handed down its latest quarterly results, which actually did include a pretty sizable dip in production. But what helped was a big lift in oil prices, which were up about 30% for the group. So that certainly helped to cushion the blow from what otherwise would have been a more challenging quarter. Now, Woodside up 1.8% as well, and there were other stocks like Santos and also coal miners like New Hope that seemed to benefit from the high energy prices. ANZ in the banking space stood out. It was up 1.4%, which helped. And then Origin Energy, what a week it's been, 1.1% higher today, but the utility was, of course, hit by a data security incident a couple of days ago. Now, it confirmed this yesterday, said that there was in fact a unauthorized access of some customers' data, and they're still working to understand the total number of impacted customers, and they said that those that have been affected will be contacted in due course. Now, as far as the losers go, we had in the tech space WiseTech down today 4.6%. Believe it or not, it is down 56% since the start of this calendar year alone. Now, it's been caught up in the tech sell-off, which has weighed on tech stocks from the US to South Korea. There's also, after greater spending on AI from heavyweights like Alphabet. And also it's been hit by governance issues, of course, in recent times, particularly the focus on its founder. We had Resolute Mining and many of the gold miners struggling. The fact that things are escalating and the tensions are flaring in the Middle East, that's the sort of thing that just pushes inflation concerns higher, and typically it sees gold prices actually fall in this type of environment. So we've had Resolute Mining, one of the worst in that bunch, falling 7%, but a number of others were down. Capricorn, Emerald, West African, Regis, Kingsgate were all down heavily. Cochlear had an interesting session. It fell about 0.5%. It was actually up earlier in the day. It released a one-page statement to the market saying that it's actually going to continue to be able to import its hearing implants into the United States duty-free, and this is following a US government investigation. Having said that, of course, Cochlear is down 57% year to date, so it is having its worst year on record. This is in its 30-year history on the market, and this is largely because a few months ago, back in April, it basically warned of a big dip in sales. And then the ASX, the market operator, down 1.2% today. It announced that its chief financial officer was resigning after 4 years in the top job. Now, looking forward from here, there is a lot to watch in the week ahead. One of the key things locally will be that inflation update on Wednesday, both for June and the June quarter. So simply put, because of what we saw yesterday as far as jobs go, the stronger this is, the more likely markets are going to be a little rattled and thinking that, oh, maybe there is going to be a rate hike at some stage later this year. So it is something that's going to be worth of a watch. Also, unofficially, we get the start of the profit reporting season. Rio Tinto will be out with its results on Wednesday as well. It's had a pretty strong run over the past 12 months, partly thanks to demand for copper and the like. But really, the official, if you will, start to the earnings season tends to happen in August, early part of the month. But it's the second half of the month where things really peak. We also get a number of US earnings as well. Microsoft, Meta, Apple, and Amazon, 4 of the Magnificent 7 out with their results. So that could certainly be a key driver of American markets. And then finally, you can't go past, of course, the situation in the Middle East. That is going to continue to be important as well. As far as currencies go today, the Aussie actually strengthened against most from where it was earlier this morning at least. One Aussie by 69.8 US. It also strengthened against the euro and the Japanese yen. Well, everyone, hope you had a great week. Have a great weekend, and we look forward to seeing you on Monday.